What's up, everyone? It's Scotty with Money Vesting. So markets once again very flat and down. A very uneventful day from a market perspective, but Alibaba absolutely ripping up over 14-15% on the day, trading higher. Lots of our members ended up making profits, so congratulations to all of you. I did share a video on March 6th. I'm gonna be very honest. I'll go over literally what my success ratio is on these trade ideas. So this right here was the video that I presented to all the members. It's a private video that I went over 5 trade ideas, including a TMF and 10-year bond analysis. So if you come over to the market, by the way, we only have a limited spots left. So 6 spots left here and 5 spots left over here if you want to take advantage of that. But some of the trades that we shared, Vertex was one of them. It's been pushing higher quite well. It's up another 1.5%, huge outperformance with respect to the S&P and the Dow and the NASDAQ, and it's rallied quite a bit. You know, March 6th, if you come back, we were trading right around these levels at $285, and since then it has rallied close to 10%. Another stock is Eli Lilly, up another 91 basis points, once again outperforming the markets. NASDAQ was down, S&P was down, and the Dow was also lower. Eli Lilly outperforming the market, and it's pushed up quite well. Once again, if you come back to March 6th, March 7th, we were trading roughly around $310. It's rallied a little bit over 8.8%. Now, I'm not going to take full credit for Alibaba, and the reason is because, look, we did dip down to a next support level down to $79.80. And from those levels, it's actually rallied quite a bit, 23-24%, after a very strong momentum coming in after the announcement today. Alibaba made that it's going to be splitting into 6 different IPOs, and that's obviously creating some optimism and unlocking some shareholder value according to their statement as well. However, it's not always perfect. So if you take a look at Johnson & Johnson, it's pretty much been sideways, right? It's not been profitable, but it's not been a losing trade either. It's mostly been sideways since March 6th. It's just gone nowhere. Instead, it's been consolidating sideways, although my price target was all the way up to $168. And then finally, we also had TMF, which obviously is in the green zone, in the profitable zone. It's been pushing higher from low 770s, $8 a share. It's rallied quite a bit, 24%. It's now starting to come back down a little bit as yields are moving back higher. And last but not least, there was also Enphase, which was the only trade that did not work out on the upside. And it's just been selling off quite aggressively because the valuation was a little bit too high to begin with. So I would say 3 trades out of 5, actually 4, total 4 out of 6, one went sideways and one of them actually went lower. And that's what you can expect if you are part of the community. Like, I'm not going to be sharing trades every single day, every single week, but instead it's going to be when I find opportunities, when I find good asymmetric opportunities. Like, for example, I've got Square as a potential trade coming up if and when it trades down to as low as $51, $52. I've got a few more companies. For example, Shopify is going to be a potential trade if and when it drops down to our certain levels, support levels that I'm watching for these particular companies. So nonetheless, definitely check it out. Link's going to be down below if you want to be a part of our money investing community, and of course join our Discord and get access to all the private videos, including alerts, including trade ideas and videos and private videos, all that stuff. So Alibaba shares is soaring 15% in Hong Kong on news of major overhaul. And again, I did a video about this earlier today, so you can go ahead and check that out. But these right here are going to be the 6 business groups that Alibaba is going to be splitting in. So cloud, Tmall Commerce and Group, local services, we got smart logistics, digital commerce, and digital media and entertainment. Every single one of them already has a CEO assigned to it. So we should see some more updates. We should see some more news around this and how it's going to be structured with respect to existing shareholders as well. And all of that, of course, is going to create some more optimism about Alibaba's future. LuLuLemon announced their numbers and they jumped over 13% after hours after beating expectations both on revenue and EPS. So they came in at 440 adjusted EPS versus 426, and revenue came in at 2.77 billion versus 2.7 billion dollars. Maybe I'll do a separate video, more dedicated analysis on LuLuLemon, and of course going over my intrinsic value for this company. I've always wanted to buy LuLuLemon, but the price has always been a little too high for my liking in terms of valuations. So again, we're going to revisit this stock. We'll take a look at what what we can do with the company's forecasted earnings and what the intrinsic value ends up being. So Nvidia will be a grand marshal of the AI bubble parade, says Josh Brown. So this was a piece that came out actually today, and Josh Brown pretty much mentions that, of course, Nvidia being up over 80% in the last few months alone, Nvidia is going to be the grand marshal of that parade, twirling the baton down the main street, and that is going to be an all-year story. So a scarcity of artificial intelligence plays, in other words, stocks, is causing an AI bubble, with Nvidia leading the charge. And it's quite interesting, right? Because we've been on a very similar page. Like, this is kind of word for word what we've talked about and what Josh Brown is saying, that artificial intelligence is in a quote bubble, and valuations have gotten way too overextended. And because of the lack of available stocks out there, Nvidia is the one that's driving this momentum. Nvidia is the one that's actually moving up on simply AI. There's nothing fundamental to this move. And he said you're going to see valuations in small handful of AI stocks that are going to give you vertigo, and funds, products, IPOs, and strategies are being formulated in the dozens as we speak, and this will hit hundreds before we're through. It's merely stage one. So what he's really saying over there is that eventually you will find a lot of IPOs. It's going to be kind of like that craziness from back in 2021, when there's going to be a lot of IPOs that are going to happen for artificial intelligence. I'm honestly convinced that AI is where one needs to be over the next decade or so, because I feel like this is going to be a very strong opportunity, a lot of potential. I will be spending a lot of time in researching that. And actually, I do have a couple other things that I want to go over. So AI could drive a $7 trillion in global growth in 10 years. Goldman estimates, and here's how to play it. So again, I will be doing some serious analysis, and we'll be putting it out there for all the members to look at when it comes to artificial intelligence. So wait for those videos. I will be talking about that in more detail. And these are stocks expected to lead innovation in generative AI. Of course, Microsoft is on the list, Google's on the list, Nvidia is on the list, Amazon, Salesforce, Meta, Adobe, and Intuit. We've covered all these companies on the channel. These are all high quality, fantastic businesses. Some of them more overvalued than others. None of them can be considered undervalued right now, even though they're down from their 52-week highs. But these are the ones that are considered or expected to lead this innovation in generative AI. I'm surprised they didn't mention Apple. Apple's usually late to the game, but they are, they know how to do it right. They don't do it first. They do it right. So Apple, not part of it, but eventually I think it will be. So Goldman Sachs also says generative AI could impact 300 million jobs. Here's which one. So again, I'm going to do a separate video on these headlines. These are very interesting articles with respect to artificial intelligence. And again, we're going to be talking about it in more detail. This is a discussion that's yet to be had in our future discussions. So again, it's going to be quite an interesting time in front of us. So SVB customers tried to withdraw nearly all the bank's deposits over 2 days. So Fed's Barr testifies. So we knew that Michael Barr was scheduled to testify in front of the U.S. Financial Services Committee. He's the one leading the investigation with Silicon Valley Bank. So since the day regulators seized SVB, it was public knowledge that panicked customers withdrew $42 billion on March 9th on concerns that uninsured deposits were at risk. And this was the biggest bank run in history. Right? Nothing compared to what we saw during the Great Depression, because, of course, the money was not as much back then. So that's why 42 billion is pretty substantial number. And again, happening in one day. Think about that for a second. Where did all that liquidity go towards the end of the day, right? So biggest bank run in the history of the U.S. So Fed funds futures are still pricing in for some serious rate cuts. Now we're pegged for 3 consistent pauses at this rate, 4.75 to 5%, and then 1, 2, 3, 4, 5, 6 rate cuts priced in till the end of September of next year, coming down to 3.25 to 3.5%. This is what's on the calendar for tomorrow. Michael Barr is speaking again on March 29th, which is tomorrow. We got the pending home sales, and that's pretty much it. And then on Thursday, March 30th, very important GDP numbers coming out. We've also got the jobless claims, which come out every week, corporate profits, and the Fed's balance sheet. So don't forget about that. That always gets missed out because it's at the very, very bottom. But the Fed's balance sheet's also coming out. And then finally on Friday, we got personal income and outlays. We got the personal consumption expenditure, the Fed's preferred measure of inflation, so PCE and core PCE. And we got consumer sentiment coming out and a few more Fed members talking on that day. So markets, once again, a little bit of a pullback. Energy was green. We had basic materials pushing higher, restaurants and specialty restaurants, along with some household companies pushing higher, but a lot of tech Big tech was selling off. Again, this is more of a concentration risk that I've talked about in my previous videos. The market lacks breadth. We're not really seeing a lot of other names in the Nasdaq, a lot of other names in the S&P 500 move higher. Now they are, but now big tech is starting to pull back, right? You've got Google down 1.4, Meta down 1%, Amazon's down 82 basis points, Microsoft, Apple, Nvidia. If these companies start to pull back, there's nothing other sectors can do that's going to solve that, right? That it's not going to be enough for other sectors to push higher, to make the markets go higher. But comm services, technology, if they're down, they're definitely going to take the market down with them. Energy, the big outperformer, basic materials, cyclicals, industrials, all pushing higher. And in the last 1 month, the markets are higher, all on the back of comm services and technology. Those are the only two sectors up over 4 to 6%, respectively. And over the last 1 week, we got consumer defensives and basic materials pushing higher as well. Sugar prices, orange juice, crude oil, all pushing higher. Coffee, lumber, heating oil pulling back. And we got Bitcoin here pushing past 27,000, and Ethereum just a little bit over $1,700. So that's where we are with the markets at the moment. So talking a little bit about crude oil, we're once again starting to see it creep back up, and it's quite interesting, right? I actually did a video a couple days ago. It's been a while actually. Did a video talking about. I've been posting so many videos, so I can't even remember when I posted it. But there was a video where I talked about how energy right now, as it stands, energy is one of the worst performing sectors. Well, at least it was up until that video was down over 8.8, almost 9% on a year-to-date basis. But there's a consensus out there that is suggesting that energy is actually going to be the best performing sector in the next 12 months. So energy right now has pretty much crossed financials, healthcare, utilities, and biotech, 4 sectors in 4 days. Quite interesting, right? Keep a close eye. It's edging higher and higher as crude oil also recovers. It's only down 3% now on a year-to-date basis. It was down a lot more. It's now starting to push back up. So don't sleep on it, giving you the opportunity right here. Just make sure that you do research there. And of course, crude oil here pushing back up over $73 a barrel. This will go ahead and turn this level back into a support. And there's a reason, right, why Warren Buffett's buying Occidental Petroleum consistently over day after day. He's been plowing in hundreds of millions of dollars into this company, and it was up a little bit over 4% just today. Bitcoin here still struggling, so getting a resistance here at 28,000. So this is going to be a level to watch for BTC, and of course we got Ethereum also coming down under 1,800. But this is going to be a decent support level. We've seen a lot of consolidation, a lot of back and forth for cryptos in general. And talking about volatility, it was down a little bit over 3%, coming back down to under 20 levels for the VIX. Talking about QQQ versus SPY, so we are seeing a little bit of underperformance on the Nasdaq with respect to the S&P 500. So it's down a little bit over 1% right now. We were overbought. We still pretty much are. Same thing with the RSI. So it's only normal for us to see a bit of a pullback on the Nasdaq relative to the S&P 500. They're both coming down, but Nasdaq's coming down more relative to S&P 500. So again, we saw 5 weeks or 7-8 weeks of consistent outperformance from the QQQs, and now they're just starting to pull back a little bit. Talking about the markets now, so S&P 500. So again, remember, we got GDP numbers later this week, and we got inflation numbers this week. So markets have been incredibly sideways, lots of consolidation. This week, the markets are up a mere 1 basis point. That's how much the markets are up this week, S&P 500. NASDAQ, on the other hand, is down a little bit over 91 basis points. So S&P is up a whopping 1 basis point, and the NASDAQ is up a 91 basis points. So we have really not gone anywhere this week, right? It's almost the middle of the week. But I think what's going to move the market is really going to be those GDP numbers, and then, of course, different Fed members' speeches, and we've got the inflation numbers, which I think are going to be super important for the market. So resistance going to stay put, 12,280. This is the level that we are paying attention to, right? This is what we've been watching for quite some time. Support level is going to stay put at 10,191, and we've just been consolidating sideways. There's not a lot of movement in the markets because of how macro driven we really are. And if you take a look at where we've been since May 2022, we've pretty much been at the same level, right? Since May of last year. We're coming in on a year of absolute sideways consolidation, nothing happening, right? So 1 year of nothing. That's what we've had with the market. But resistance is going to stay put over here at 41, 45, 4,200. Support level is going to stay about at 37.74. This is going to be that intermediate near-term support all the way down to 34,500. That's also in line with its October lows. Talking about Apple here, and Apple now starting to pull back a little bit. So again, we talked about the negative divergence. We talked about the RSI, the MACD. So again, it's not unusual to see a bit of a pullback here considering the technicals and how they're lining up. And if big tech starts to pull back, the market's not going to be able to follow through or continue this momentum upwards, even though other sectors are showing gains. So that's why the concentration risk needs to be addressed, because if the markets are rallying simply because of big tech and none of the other sectors are participating, that's a problem, right? Because at one point you're going to have that switch over again where big tech starts rolling over, other sectors start pushing up, the markets goes nowhere. But if big tech starts pulling back and other sectors also start pulling back, then you've got a bigger sell-off in the market. So that's what's happening right now. We're seeing big tech pull back and other sectors rally higher, and we're going nowhere, right? The market's pretty much sideways. That is what is playing out with S&P 500 and of course with NASDAQ. But right now, 158 is going to be that resistance. We're kind of like back and forth in and around those levels. So keep a close eye on that. Amazon here also starting to pull right back down. We're still in the context of this downtrend. So making lower highs and lower lows, very much neutral with the RSI and the MACD. So just pretty much going sideways at the moment. Tesla coming down 1.3%, down to now under $190. As you can see that we are struggling quite a bit at this resistance at $200, something that we have addressed on the channel before. So that is going to be that level to watch, and support level sitting close at 175. So this right here is going to be that support all the way down to 166 for Tesla. Another thing that I wanted to mention off topic is that the 16% annual discount for the Patreon does expire at the end of this month. So we do have 3 more days if you want to take advantage of that. Again, I forgot I mentioned it. Next up, we're going to talk a little bit about Nvidia. So Nvidia now starting to pull back a little bit more, slowly and steadily, down 46 basis points, but still, pretty overbought with the RSI and the MACD, and we just heard from Josh Brown as well. So resistance is going to stay put at, as high as $292. That's going to be a level to watch, and of course, this is going to be that gap that eventually needs to be filled. We've got a lot of support levels down in the 100s for Nvidia, but again, be careful with the momentum that Nvidia has. And of course, it's driving very much on this artificial intelligence boom. Talking about advanced micro devices, AMD was down quite a bit. It was selling off more than Nvidia, something that we had discussed in our previous videos. And again, RSI rolling over, MACD's coming down. We've got technical resistance at about $100 and $203, very much overextended. So it's only normal for AMD to pull back, considering how much it's already rallied. So starting to pull right back down, $102 is going to be that resistance, and now we're starting to pull back here for AMD. Talking a little bit about PayPal. Apple, by the way, they did launch their after pay later services. Didn't really quite affect PayPal yet, but trading sideways, not really gone anywhere. And PayPal, very similar to the market, is at the same level as from back in May. So from May 2022 to where we are now, absolutely no progress, zero growth. So support level is going to stay up at $67, $70. This is going to be that level to watch, kind of in line with that previous support, and my fair value is also staying pegged at close to $70. And we got that lower high sitting right over here at 78, close to $80 per share. Talking about Square here, down about 99 basis points, but again, starts to rebound a little bit, and it was really oversold and pushing higher after the short attack from Hindenburg Research, came down to $58, $59, and getting a very nice move back up for Square at the moment. Talking a little bit about Meta and Meta Platforms here, also pulling back down about 1%, but still validating $200. In fact, it was as low as $197. Buyers stepped in to put us back over $200 per share for Meta. So we're seeing a little bit of momentum back up for this company. Talking a bit about Netflix, and Netflix here continues to pretty much go sideways at the moment. It has seen a very nice rally over the last few days, but down 1.2% at the moment. My target and resistance stays put at close to $379, $380 per share for Netflix at the moment. Talking about Google, and Google was also part of that trade idea, right? In the previous videos, we've talked about Google, and it played out perfectly, right? It broke out of that resistance, got up to as much as 107, and now we're starting to pull right back down. Why? Because, well, technicals are overbought. It's not crazy, right? It's not something that is made up. Like every time I expect a pullback, it comes off as something that is gonna not is bad, right? If I'm expecting a pullback, or if I'm suggesting that there's gonna be a pullback, it comes off as like, hey, that's bearish, don't say that. No, but it's just obvious, right? I mean, it's pushed up so much. RSI was overbought, so was the MACD. The technicals were really overstretched, so it's normal for stocks to take a breather, right? Come down a little bit before making that next move higher. No single stock you'll ever find goes up in a straight line up, right? Or goes up like this in a parabolic move up, except for Tesla. No, I'm just kidding. But every stock pretty much goes up and then comes down, goes up, comes down, goes up, comes down. That's just the trend that they follow, right? And that's just with everything in life. I know I tie everything back to life, but it's really like, we take 2 steps forward, 1 step back, 2 steps forward, 1 step back, 2 steps forward, 1 step back. So that's how progress is made, right? That's how we do with our personal lives as well. That's the same thing with stocks. Of course, sometimes they go sideways. Sometimes they don't really do much and they consolidate sideways. But right now, what we're seeing is for Google to simply pull back and take a breather. It's going to give us the opportunity to maybe accumulate more. Google is definitely on the list for generative AI and in disruption. And in the future, I have no doubt the ecosystem is going to stay intact. Of course, Microsoft is coming for their business, which is going to put Google in a very vulnerable situation. We've been talking about it since last year in November, December. So I do have a very significant bull bias on Microsoft here with generative AI, but not at these prices, right? So at closer to 230s, 220s, we'll be watching those. $290 is going to be that next resistance for Microsoft at the moment. And last but not least, we got Shopify, and Shopify here also just down about 1.6%, consolidating sideways, and kind of, very much skirting along that higher low line, ascending supports, trading, in those levels, and support level is going to stay put at 41 to as low as 29, close to $30 per share. So, hope you guys enjoyed this video and a complete update on the markets here. Let me know your thoughts down in the comment section below. Bottom line is, markets are moving sideways. Very, very uneventful week so far because big tech's coming down, other sectors are pushing higher, and as a result, on a net basis, we're not going anywhere. The concentration risk is very real, and that's exactly what's happening right now with big tech underperforming other stocks, and as a result, it is putting the markets in a very much of a crossroads where we're not really making any progress. So I hope you guys enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel. Don't forget our Patreon or Discord. The 16% annual discount is available till the end of this month, 3 more days, and after that it will go away with limited spots available. So link's going to be down below. As always, happy investing. I'll see you all in the next video.